First of all, we hear about Edgar Bronfman and Bain. He's not the only one in. How many people are bidding right now? And maybe more important, what are they bidding for?
They're bidding ultimately for Paramount. Now, it's a complicated ownership structure that we can get back to, how you get ownership of Paramount, but that's what they're trying to get. And Paramount, of course, is not just Paramount Movies, it's also CBS, MTV, a bunch of cable things. Who's actually actively bidding? We're not totally sure, but so far we've had Skydance, which is David Ellison, son of Larry Ellison of Oracle fame, has made a run at it. Apollo made sort of a run at it. There was talk that David Zaslav of Warner Brothers Discovery made a run at it. So there are multiple players, and who's the lead horse at this point? It's not entirely clear.
And I mean, we're also talking about when if you have Sherry Redstone and basically the board, and then you have everyone else, all the non-voting shareholders. Again, it's a very complicated deal that we've been tracking over the past several months. When it comes to the non-voting shareholders, who's looking out for them in this process?
Lawyers. So there is a duty that Sherry owes the non-voting shareholders. She owes it to all of the shareholders. And because she calls the shots. She can decide yes or no. She has to be careful to be fair, to run a process that's fair to the non-voting shareholders. If you go online and buy a share of Paramount, you are buying a share that has no votes. All of the votes are in shares owned by a group that ends up being controlled by Sherry. So if the non-voting people like you and I, we own shares in Paramount, our protection is the threat of lawsuits that say, hey, you didn't treat us fairly, you lined your pocket at our expense, and we're going to go to court and we're going to rectify that.
So, Eric, given that possibility of litigation, and we have seen litigation in other contexts like this, where courts have really been upset with what was done, how do they protect themselves? And by they, I mean not just Sherry Redstone, presumably the board, maybe a special committee of the board. I mean, who are the various players here that need to protect themselves to make sure it's fair?
So think of a bunch of groups. Think of the management team. Now it's the office of the CEO with 3 people. So the senior officers, the directors, and then when deals are being done, directors usually say, we'll put together this special subcommittee of directors who will kind of run the deal and report to us. They and Sherry have the fiduciary duties, and what they do is they run a fair process. They run a process where they can show that, look, this process not only was fair, this process was designed to get the highest reasonable value for all shareholders. What value we ended up getting is whatever we ended up getting. But David, it focuses on the process. What the court looks at is not the dollars and cents in the end. They don't want to second guess that, but they will second guess the process. So did you fully inform all of the shareholders whether they vote or not? Did you kind of try to get people to compete and give the highest bid? Was that bid composed in a way that paid Sherry and the other shareholders fairly? So it's all about documenting a process that's reasonably designed to get the highest value for all shareholders.
And so I take your point on the emphasis of the process here, of course, how the bid is actually being formulated and how it goes through. But let's talk a little bit about how you actually assess value here, because we're talking about National Amusements, which of course controls Paramount, and the bids coming in for Paramount, but you, of course, are also bidding for National Amusements. I mean, how do you come up with a fair value for a company such as this one that's structured this way?
Oh, Katie, that's a good point. The more complicated the ownership structure and the more complicated the deal, the harder it is to compare apples and apples, because you're not comparing apples and apples. And the requirement is that you get the highest value, which doesn't even mean the highest price. Maybe the highest price is somebody who you don't think will close the deal because they can't raise the financing they need, or they can't close the deal because of antitrust concerns. But when you have a deal that's put together with this many complications, comparing them, it is really tough, which is why the court is going to look and say, Well, let's look at the process because we can't actually tell whether this complicated bid is worth more than that complicated bid, but we can understand your process.
Let me add one other level of complexity. This is a media company last time I checked, and the media industry overall is in a lot of turmoil right now. The valuation of any of these companies is up and down and all around. We're not sure particularly about the future. So how does that figure in to try to assess the valuation here? Again, bearing in mind we have a private company, which is National News, that owns controlling interest in a public one of Paramount.
Even with a public company, Paramount, which is Paramount and CBS and MTV and BET, it's hard to value those assets because the value of those assets is changing. The crown jewel is probably CBS, the network, but those networks are probably declining in value. The cable channels are probably declining in value. Streaming is changing the value of the old assets. So how do you value the assets? How do you look to the future and say, going forward for the next 5 to 10 years, what are the actual value of these assets where we know that those values are changing? We don't know how fast, how deeply. We don't know what Paramount can do to change things. They said in their recent annual meeting, we're going to cut $500 million in costs. We're going to sell some of those assets. We're going to invest in content. But even if this was a simple deal structure, what is Paramount worth? That's a tough question.
And so you wrap all of this together, all of these different moving pieces and these complicated structures. And what's your gut tell you about how this plays out? What's your best guess as to what the process actually ends up looking like?
I will venture that there's a 50% chance that nothing happens. That in the end, Sherry says, this is too much. I will just keep the company. I'll build its value and I'll sell it in 2 or 3 years because the value of this company has really gone down. This company went public about 3 years ago at $85 a share. And today, here, I'm looking at the terminal, today, oh, wow, today it's at like $20. So she might just keep it. If she doesn't, I suspect it goes to Skydance and Ellison because they're the furthest along in the process.